Tezos. Tezos is a decentralized, open-source blockchain network that can execute peer-to-peer transactions and serve as a platform for deploying smart contracts. The native cryptocurrency for the Tezos blockchain is the tezzie, which has the symbol XTZ. As of January 2021, there are over 400 block validating nodes, bakers, on the Tezos network. The vast majority of transactions currently happening on Tezos today though are mostly to maintain consensus and are not for more substantive operations, such as executing smart contracts, even though the network has the capacity to handle many more transactions. The Tezos network achieves consensus using a liquid proof-of-stake model. Tezos features an on-chain governance model that allows the protocol to amend itself when upgrade proposals receive a favorable vote from the community. This feature allows Tezos to avoid hard forks that other blockchains have to contend with. Tezos was first proposed in a white paper published in 2014. Its testnet was launched in June 2018, and its mainnet went live in September 2018. Tezos received media attention for its large initial coin offering in July 2017, which raised $232 million, and subsequent public disagreements between its founders and the non-profit Tezos Foundation that was set up to manage the raised funds. Those disagreements led to delays in the deployment of Tezos, which caused investors in the project to bring lawsuits against its founders and the Tezos Foundation. History. In August and September 2014, respectively, one of the project's founders, Arthur Bretman, released a paper called the Position Paper and the Tezos White Paper. Bretman wrote the two papers under the pseudonym L.M. Goodman, in reference to the author of a notorious article in Newsweek magazine claiming to have located Satoshi Nakamoto, the pseudonymous creator of Bitcoin. In 2017, the Tezos Foundation, a Switzerland-based non-profit, raised $232 million in a fundraiser and became one of the biggest ICOs of the 2017 cryptocurrency boom. Notably, billionaire investor Tim Draper was a participant in backing Tezos ICO. The Tezos Foundation subsequently faced a management controversy about the use of raised funds by Foundation President Johan Gavers. Johan Gavers resigned on February 22, 2018. In August 2020, the Tezos founders and the Tezos Foundation settled the lawsuits against them, alleging unauthorized sale of a security for $25 million paid by the Tezos Foundation. Design. The primary protocol of Tezos utilizes liquid proof-of-stake, LPOS, and supports Turing-complete smart contracts in a domain-specific language called Michelson. In Tezos LPOS model, network nodes that validate blocks and add them to the blockchain known as bakers, are selected to perform those actions proportionally to their share of rolls of 8,000 XTZ that they put up for stake, and a baker receives staking rewards in the form of newly minted XTZ after successfully validating a block and adding it to the blockchain. Holders of XTZ can delegate their XTZ to bakers to share in the staking rewards that bakers receive. Holders of XTZ who do not stake or delegate their XTZ risk suffering a loss in value due to inflation as new XTZ are created and distributed to bakers for validating new blocks and adding them to the blockchain. The current annual inflation rate is 3.6%. As of January 2021, nearly 80% of all XTZ in circulation were either directly staked by bakers or delegated to bakers for staking. The Tezos protocol allows itself to be amended by a staged process performed by committing operations to the stored blockchain to submit proposals, intended code changes, and to vote on those changes. If a proposal receives enough votes, the protocol updates itself to incorporate the code changes. The following proposals have been approved to date. Token standards. Use cases. In July 2019, Banco BTG Pactual SA together with Dalma Capital, a Dubai-based asset manager, announced plans to utilize the Tezos blockchain for security token offerings, STOs. In February 2019, Elevated Returns, ER, a financial group focused on digitizing traditional financial assets and best known for its tokenization of the St. Regis Resort in Aspen, announced that it selected Tezos as the blockchain on which it will offer fully compliant tokenized real estate offerings to qualified investors. Reliability. In March 2019, the audit company Leased Authority published the results of 5 checks performed for Tezos Foundation during 2018. With high probability, Tezos protects against chain reorganizations and selfish baking, which are 2 common issues in blockchains using Nakamoto-style consensus. A subsequent analysis confirms that selfish baking in Tezos results in insignificant profits, even when the baker attempting it has a very large portion of the stake.